The spirit of innovation is deeply ingrained in America, and Google is helping Americans innovate in ways both big and small. The Department of Defense is working with Google to help secure America's digital defense systems, from establishing cloud-based zero-trust solutions to deploying the latest AI technology. This is a new era of American innovation. Find out more at g.co/American innovation.
Reality radio for a really great future. We're talking real money.
In honor of our new president and his love of all things gilded, today we're talking real gold on Talking Real Money. It's been a while since we've talked about gold, and gold lately has been on a roll. Maybe it's because of the high demand that it will be in for gilding of all the things at the White House. I'm not sure. But why has gold been on a tear, and what does that mean for investors?
Now, yeah, how about that part of it? Yeah, sure. The show is about investing, I believe, correct?
Well, unless you're brand new to the show, you probably already know the answer. But we thought we'd do it again, just for the heck of it.
Only X number of times going back 30 years. So,
okay. Hi, everybody. I'm Don McDonald. This is Talking Real Money. That's Tom Cock. We're on two different coasts, but we're on the same side as you when it comes to investing. No, we're on your side.
Oh, there's that. Yes, of course.
Aren't we on their side?
Absolutely 110% of all the time.
Your side.
Yes, got it.
And today we're going to attack. And that's actually a very appropriate term to use. The recent excitement over buying that stuff that may or may not be in Fort Knox. I always thought it was there, but I guess somebody hasn't checked. Did somebody forget to check if it was in Fort Knox? Did Trump ever make it? Did he and Musk ever make it over to Fort Knox for their little?
They're going to start counting it, Art. They're going to bowl bar by bar. Okay.
Yeah.
Nope, there are 4 missing. I knew it. Told you. Yeah. Okay, gold. All right, but this comes from Yahoo Finance. Gold, traditionally seen as a hedge against geopolitical and economic uncertainty, closed out its strongest quarter since 1986, climbed over $3,100 an ounce, marking one of the most significant upswings in the precious metals history, which is lengthy, by the way. I looked this up. I took the time to do a lot of research on this topic.
Oh, good.
Because
you don't very often, so
no,
I'm really
don't.
impressed.
I know. I'm spending a little time on the actual show. I went to spend a little time looking at good old AU, right? That's the symbol, right?
AU, yeah.
Atomic number. Do you know its atomic number? No, you probably don't.
Why would I? No.
Number 79. So if I'm going to buy a precious metal, I'd rather it be number 1, but we'll go with 79 this time.
Isn't number 1 like hydrogen?
Probably. Do you trade that a lot? I don't know. I got it under my bed just in case things go wrong. Gold goes back to the Paleolithic period, 40,000 BC. So it's called by some the barbaric relic.
Do we have a 40,000-year chart of gold?
We don't have, but I can tell you this. It created a war. The Second Boer War was over gold mining rights, which does go back. I think the Second Boer War is maybe 150 years old. It goes back a ways. This is the Brits, I think, in South Africa.
Is this the one that Pumbaa fought in from Lion King? Was that the Boer War?
I don't know. This is the Second Boer War.
This would be the second one.
What are you going to do with all this? I mean, here we go.
So far, you've given us absolutely nothing of value.
I know, but
nothing of value.
Like gold, right? It's like, it works on the ring. It looks really good on the ears. But let's just talk about this. So, because why would you buy gold? Would you buy it, first of all, as a hedge? Because what is a hedge?
It's a lovely shrubbery.
I want the two-level effect.
Yeah, the two-level effect. And
no, but okay. All kidding aside, for those people who are all kidding. For those people who are tempted, and I have a friend, a very good friend. And every time we talk money, I give him our asset allocation stocks fund. He goes, "What about gold? Gold should be in there." Mm-mm. And I say, "Nope, no gold."
Nope, no gold.
He argues with me. But just explain in your terms what a hedge is, because that's what came from Yahoo Finance. It's a hedge. What in the world does that mean other than, as you correctly point out, the silly movie reference?
It's supposed to protect your dollars, the spending power of your dollars, from the ravages of inflation. And as an inflation hedge, well, it hasn't been horrible, but in terms of its investment quality, well, it has been. And I've got my 100-year, not 40,000
I've got 15
year.
years. I got 15.
I got 100 sitting
Let me
in
get
front
15,
of me.
then you can get so 15.
15. That goes back to 2010.
Yeah, this comes from Kiplinger. 15 adjusted for inflation. Gold up 3.2%. The S&P 500 with dividends reinvested 7.2%.
All right. Well, I can outdo that. Let's go. Let's go
Sure
back to the inflation-adjusted price of gold at its big peak after the inflation of the 1970s. This would be back in early 1980. Gold's inflation-adjusted inflation-adjusted price in February of 1980 was $2,700 an ounce.
Wow, and we just told you it's what, $3,100
well,
now, right?
Yeah, it took it to get back to 2,700 inflation adjusted
27 years.
It took gold until 2024.
Longer than 27 years.
You got it. 34 years.
Okay, but
almost 35 years. So what kind of investment does that make it if it doesn't exceed the value? It doesn't exceed inflation over 30 plus years.
That's not a very good investment. I mean, you want things that are going to beat inflation, right? Because you got to still pay for the rising cost of, can we say it, cars? Even though a guy wrote me and said, don't pick on the auto industry. I'm not picking on anybody. I'm just simply saying, if you have a 20 to 25% tariff on an automobile that was $10,000, isn't that going to be like $12,000 or $12,000?
Wait. So, where are you getting a car for $10,000?
Thank you. Okay, you're right. Even my little Toyota was more than that.
A lot more than that?
Yeah. All right. So that's 1980. You said you had 100 years.
I do. Let's go back. Ladies and gentlemen, boys and girls. Actually, I have 110 years.
Ooh.
I have 110 years. 110 years ago, gold was $614 an ounce adjusted for inflation. Then it took it from 1915 until 1933 to get back to that price again.
That's quite a while.
Then it went up to about 800, and then it in 1934, and then it took it. You're gonna be. This is incredible. Then it took it until 1974 to get back to that.
And that's when
years.
Nixon went off the gold standard, I think, or something like that, right? In the early 70s?
Well, no, that was because of inflation. In the early 70s, we went off it, and it dropped to an inflation-adjusted $300. Then it peaked because of inflation in 1980, and then you know the story since then. It just got back to where it was in 1980. Do you feel good about an investment that if you bought it at its peak anywhere along the way, it pretty much took you decades to recover? And
that's what I was trying to get to. It doesn't sound like a hedge. It doesn't sound like a good investment. You mentioned a very important word there, feel. Gold is I think, feeling. I own gold. And by the way, a lot of people buying physical gold, Costco can't even keep it in stock, I think, when they do the bars, right? There's out the door quick. Or out the internet, whatever it is. I mean, we're talking a little $3,000 hunk of metal. Sure. And I don't want to say that. I have a safe place at my house to lock things away. Many people do not. But feel, that's the operative word, I think, when it comes to precious metals, especially gold, because I feel the future is riskier now with perhaps a recession, right? Maybe not, with perhaps, believe it or not, interest rates not going down, with perhaps economic uncertainty, which personally I think always exists, but it feels worse today than it did. that people think they got to own. And this is the one that really drives me nuts, Tom, because you could go, if you really had to buy gold, I would recommend you go buy GLD, the exchange traded fund. But people are buying the physical gold in record amounts. They're getting it delivered to their home. They're keeping it there. And again, to what end? It's not a hedge. It's not an investment. Are they keeping it there for Armageddon? And will it help you in Armageddon?
Yeah, physical gold really doesn't make a lot of sense because you got the cost of, always have a markup or markdown on physical gold, which can be pretty hefty. Generally, it's about 5% markup, 5% markdown, markup when you buy it, markdown when you sell it. And then you've got the physical cost of storing and insuring it. And so the only thing you've got to be betting on is that for some reason, the world's economy is going to collapse and people are going to want to trade in gold.
And my worry is they're going to trade in, other metals. They'll point at you. Like bullets. like steel barrels and brass bullets. Yeah.
Yeah.
So again, I don't think it really helps you there. So that's what I'm trying to get at on a rational basis. You can't really say gold makes a lot of sense. On an irrational basis, it makes me feel good. I feel secure. I have this asset. It's not like your paper stocks and bonds, Tom, or your account at XYZ custodian. That's just in the air. This is something I actually hold. I feel a greater sense of security about it. And what we're trying to point out is you may feel great, but it's not a good long-term part of your portfolio. I'll put it that way.
However, there's a little caveat here. GLD, the gold ETF, the gold shares, the Spider Gold ETF, because it is not just sitting there in a vault, it doesn't have all these costs. It's actually made a little bit over inflation since its inception. So you would have been better off with that because of the lack of in and out costs. But here's the thing. If we go back to, I just want to find it again. What did I do with it? Back in...
This is real time.
August 11th. August 11th. August of 2011.
2011. So 14
years ago.
Yeah, right.
Right. Gold was $2,600 an ounce.
Yep.
And then it plunged. This was the last time we got all excited about gold. So is it possible that you could be buying it today at $3,000 and you could sit here for another decade, 2, 3, 4 even, waiting for your investment to recover?
Yeah. I mean, the relative strength index, RSI, for gold stands above 70, indicating the metal is overbought, which it certainly does feel like it. By the way, I think you made a very good point, although it's sometimes hard to conjure up on a podcast. If you look at a chart of gold, going back 100, whatever number of years, it goes along and does nothing or goes down for a period, and then it has these spikes like it has now. And then it usually drops and does nothing for a long period. Then it has a spike and it drops down. So you got to be a speculator to really profit. You got to know when to get in. You certainly got to know when to get out to make these little spikes that happen over short periods of time. So a couple of things, though, regarding gold. I would never, ever buy physical gold, period. I would never buy gold or anything else for that matter on speculation, which is what people are buying it on today. I'm speculating. Here's what's about to happen, going to happen, has to happen, whatever term you want to use. Got to own gold to offset that. And we're trying to show you that the numbers do not back that up as a strategy.
It's a dumb strategy because it's a dumb investment, and it goes back to our basic rule of what an investment is. An investment is something that can grow of its own volition or pays some sort of interest. Gold can do neither.
Wait, if you water it, it doesn't get any bigger? It doesn't sprout?
Nope.
Okay.
Nope. As a matter of fact, I have been watching this ring on my finger for decades.
It gets tighter, but
it gets tighter, but not bigger. I can tell you that the bigger is going on underneath the ring.
I see. Okay. It makes it more permanent, but still.
It does not grow any larger. Now, the other, there is another way to buy into precious metals too, if you want to. And that's buying a precious metals fund like Vanguard's, which will give you gold stocks. Now, we know that, and here's the other, that is a fund. I wouldn't suggest you buy it. It hasn't done well, but you could buy it because you're buying the stocks. There is a way to invest in gold, and that is by buying gold stock. Exactly.
We probably own those companies.
A diversified portfolio is going to have those stocks in it.
Yep.
So you are exposed to a little bit of gold.
So these are people that are mining gold. These are people that are processing gold. These are people that are selling gold. All those companies are part of the portfolio rather than specifically holding the metal.
You know, it's funny. Do you know who one of the biggest gold trading stocks is?
No.
Taiwan Semiconductor.
Oh, I know the name, of course.
They make Apple's chips.
Sure.
And they trade in gold. Why do they trade in gold? Because they use it in their chips.
Yeah.
That's why gold is better than crypto, even though we don't like gold.
Yeah. Do we hate them equally? I don't know.
No. We hate crypto more. Okay. Oh, yeah. Because at least gold has gold mining stocks and gold has some sort of use case.
And it looks real pretty. Yeah.
The only use case they've made for crypto so far is criminality.
Works well there.
It does. Works great.
All right. So no go on gold. Number 79 is out, on its way falling to number whatever.
Which way would you go? So gold would get heavier.
It would get heavier. I don't know that that's done by weight.
It's molecular
the atomic
weight,
number.
Isn't it?
I don't know.
Hold on.
Or if they just sort of came up with.
You know, I know all the little science geeks out there are going,
oh, they're going to get there. Here come the letters. Here come the cards.
These guys are just
emails.
Idiots.
Yeah. How do they come up with the atomic number?
It is the charge number of its atomic nucleus.
Oh, okay. Good old nucleus. Sure.
It's based on the number of protons in the nucleus. So I guess, does that make it heavier, protons?
I don't know. Again,
it's not electrons. Electrons really don't have any weight, so it must be protons.
This is why I'm not a doctor. My dad was hoping, but this is exactly right.
I know. Yeah, you got too many of your mom's non-scientific genes.
Exactly. All right, question time from John in Bremerton, Washington. You know, I went to Bremerton. I've been there many times, but went once when they had, I think it was 5 or 6 old aircraft carriers all lined up there because, you know, they used to have they still have the naval yard there, but had them all lined up. It was fun. And these are like World War II or maybe Korean War vintage. John writes, probably wants to know the answer to his question. If our income spikes for 1 year, do we automatically have to begin paying the higher Part B premiums? My wife inherited some money. We discovered that the interest income that the estate had earned was something that we had to include on our tax form using a K-1. We thus had to report $400,000 in income and pay the IRS over $46,000. There's an unpleasant surprise. Normally, we get a tax refund and our income is below $200,000. We're both retired and filed jointly. My wife has been taking her RMDs as she's over 73, but I won't reach 73 until next year. But the question is, income as it relates to Part B premiums. I believe there's a 2-year look back on that. For one thing, it's if you're working on 2025, you look back to 2023. But yes, you will have to pay the higher one based on that 1 year of income, correct?
Yes, but there is a Medicare-related adjustment. There's a form if your income-related, your IRMAA, your income-related monthly adjustment amount goes up because of a life-changing event, a major
something
event
unusual. Yes, correct.
Right. And the life-changing events, according to the Social Security Administration, are marriage. So that, you know, your income may go up.
Yep.
Divorce, your income may go down. Death of a spouse, you stopped working, your income went down. The loss of an income-producing thing. So that could be considered possibly, and you have to file a form.
By the way, can I do all 5 of those in 1 year? Is that possible?
Probably.
Okay.
I guess you could. It would you'd have to work really hard.
I've done that, I think, all 5 in 1. Well, no, not death of the spouse, but close.
Yeah. So for example, I would think that this would fall under
as an
a life-changing event.
Basically, what you're
saying.
Okay.
Yeah. I mean, I don't know that for a fact, but I do know that this form exists.
So you can tell them basically this is a one-shot thing. We inherited this money.
And then you tell them what your estimated interest will be,
which
for the
will
next...
include the RMDs, et cetera. So
right.
consult your tax planner. Be mine.
Yeah,
we have a guy, so we're
have a
set
guy
there. Yeah,
or somebody who's there are a lot of Medicare advisors out there,
sure,
who can help you with that. But I mean, it's distinctly possible. What is the highest Plan B?
Gosh, I don't know the numbers.
Oh, here it is. Okay. I wanted to look this up because my wife is freaking out because I said I don't want to retire.
You said you don't want to retire?
I don't want to.
Yeah. Every time I mention retirement, my wife freaks out.
Mine has this image in her head of us doing gardening together, or
sitting on the back porch,
that's never going to happen.
Lemonade.
That's just never going to happen. So
I'll be
anyway,
in my room.
The highest, if your modified adjusted gross income is more than, if you're married filing jointly, more than $750,000 a year.
Call us immediately.
The adjustment is $444. However, if you're under 212, you're fine. There's no adjustment.
Okay. So I think it's
so in their case, their adjustment and they can apply for an adjustment to the adjustment, and the adjustment should be adjusted by the adjuster and Social Security, assuming the adjuster still has a job.
I was just going to go there. Yeah. Check in soon. All right. Got time for one more? We're running along.
I don't care.
Perry writes us from Red Bluff, California, Northern California. Writes, sorry, Don. After many years of customer service in state government and previously the Navy and Air Force, I despise talking on the telephone. Me love emails and chat.
Me love emails and chat? What were you raised by wolves?
All right.
Me love. It's like Tarzan. Tarzan love email and chat.
All right. Here's the question.
What?
Well, we're talking about precious metals. I thought that's a good tie-in.
Right.
Just an offbeat question to my favorite duo that talks real money. Oh, thank you for that, Perry. If they actually get rid of the penny as currency, can legally melt them, is there any guesstimation as to how much copper might be recovered from old pennies? I imagine there are many old copper pennies in jars out there.
Actually,
I don't know how critical this is.
Hold on. This is going to shock the heck out of people. Today's penny, now they used to be mostly copper.
Very little copper is what you're going to say?
Is 5% copper and 95% zinc. So you're going to get a heck of a lot of zinc. However, they're still worth about, I think the last I saw was like 2 cents worth of metals in them. So a penny would be a good meltdown investment.
Yeah.
I don't know, though. You probably would have to then melt it down and then make them back
clean
into
it out.
Something. Yeah, because you're going to probably get a huge discount. So it'll probably be close to a penny to a penny.
Is this something that you're interested in doing, Perry? Pretty Perry Penny? I don't. It wouldn't be a strategy.
For all of you who have been sending me notes lately saying, I like Tom's jokes. They're really funny.
That's true. We have got the number.
That was not funny. You have to, if you think that was funny, then really we've got to work.
If I don't laugh at my own stuff,
we got to work
laugh
on your sense of humor.
Well, there's that too. So, by the way, as a quick aside, how much longer do you think the penny will last? It will be regularly
They'll
issued.
last a long time. They're made of metal.
No, I know. How much longer will they actually be issued by the U.S. government?
Oh, I hope soon. Oh, I'm sorry. I looked it back. I looked back. There were 97. They're 97.5% zinc. So even worse.
How many more years are they actually going to make the penny?
Make the penny?
Yeah.
I honestly think we're on the cusp of eliminating the penny.
No, I will go out and I'll say never. Because once these things get rolling, it's the whole institution. It's hard to get rid of stuff. So we'll see.
You're giving too much power to Ball Company.
Whatever it was, the one firm that's still profiting from the manufacture of the aforementioned penny. So
the Copper Slug Company. And I think it was a division of Ball Glass. I'm pretty sure. American Elements is the name of the company.
Good luck to them is my take. So.
All right.
That's it. All I got.
You can buy them. Oh, let's see how much the slugs are.
We can make our own pennies in the basement?
Apparently. Oh, this is a quote. I have to fill the whole thing out.
No, don't do that.
I'm not going to do that. Yeah. I don't care. All right. Thank you all for doing this thing with us. We call it a podcast. You know what? Do you know why where the name podcast came from? Do you remember?
No, I don't.
Remember where the word podcast came from?
Please.
It was invented by Apple.
Of course it was.
Apple came up with the iPod, and they thought it would be cool for, little programs to be on there, so they created podcasts for the iPod. Mm-hmm.
Doesn't that just make sense? And for those of you who don't know, we've been podcasters for decades. This is not just something we came up with last weekend. We were on a podcast that was still exists, called Sound Investing. As far back, I think it started getting produced a podcast more than 20 years ago. And we were picked with our friend Paul Merriman as the best money podcast by Money Magazine in 2008. So don't you forget it. How's that?
Huh. I was wrong. Somebody told me. I just looked it up because somebody told me it was Apple, but it says the term podcast actually predates Apple's addition of podcasting features to the iPod.
Ah.
That supposedly it was introduced in 2004 in an article in The Guardian. I'd have to check that. I don't know. But maybe. I don't know. Okay. But it makes sense that it would have something to do with the iPod because that's where the word pod came from. Nobody used pod in terms of sound until the iPod.
Isn't that like a group of whales or something? Or
it is. It's a pod of whales.
Okay.
And what's a group of crows? Do you know that?
I should know that, but I don't.
It's not a flock of crows.
No,
as you would
there's
think.
a name.
It is
it's
not
a weird
flock
name.
of crows.
What is it?
No, and it seems vaguely appropriate for these evil, dark birds. Think about them. They're evil and dark, and they're really loud.
They are loud.
It's called a murder of crows.
That's it. Yeah. I should have remembered. I'm going to write that down so I don't forget it. So, by the way,
every morning when they're screaming in my tree outside my window, I want to murder the crows.
Speaking of writing, please write us with your questions. We love taking them.
No. Go to Talking Real Money.
That's right. Don wants to spoken. If me love emails.
Me love spoken questions.
Me love questions. So me love them. You love them. We all love them. So go to talkingrealmoney.com. Click on whatever. What do you got? It's not Ask an Advisor.
No, it's Contact Us.
Contact us. Whatever. I don't get on the web, as you know, a whole lot.
And then if you do that, then you'll join us here on the podcast or the show, Talking Real Money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appellate Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appellate Wealth, a fee-only registered investment advisor. Please see Appellate Wealth's ADV Part 2A on our website for information regarding Appellate's fees and services. Appellate Capital, LLC, DBA Appellate Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appellate does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. Is anybody still listening?